Welcome to FX Options University, recorded live at the International Securities Exchange, the world's largest equity options exchange. Join the industry's top trading professionals as they provide insight and strategies for trading in the currency markets using FX options. FX options are a low-risk alternative to hedging currency moves in any market condition.
The second example is an example of a range when the market doesn't really know where to go. You can see this is an horizontal triangle, and once at this point the lower boundary of the range is broken down, you can see a very huge movement on the downside, at least the size of the channel. And you have finally the descending channel. This is the same kind of product, I will say, as the ascending channel, but on the other side. So you can notice a descending, a bearish trend line, and try to take opportunity to sell any rebound which can touch the upper boundary of the descending channel. So now let's talk about chart patterns in particular. We will see 4 kinds of patterns: double bottom and tops, head and shoulders, triangle, and flags. We'll start with the 2 main reversal patterns, which are double top and bottoms and head and shoulders. So let's start with double bottom and double tops. This is a reversal pattern. It means that the main trend, which can last for some weeks, is reversing up or down. The main trend is, in the case of a double bottom, was at the beginning a bearish trend, and on the chart you can see that a reversal pattern is shaping, in this case a double bottom. So we have 3 main rules to validate this kind of figures. The second peak is weaker than the first one. As you can see, the second peak is above the bottom of the first one. There is a balance of 2 peaks. That means that they are quite similar in time and amplitude. They are the same size during the same trading time. And the neckline is not horizontal, an horizontal neckline. This is exactly the opposite for the double top pattern. The initial trend is a bullish trend, and thanks to this double top figure, a new bearish trend is arriving. So let's see an example of a double bottom pattern. This is on a daily chart. You can see the overall bearish trend and two peaks on the downside, which are, as I said before, equivalent in terms of size and amplitude and timing. The neck, we can't really see the neck, but is not horizontal, and once it's broken, the trend started a new bullish trend. The former bearish trend is reversing up and becomes a bullish trend. And either you can buy when the neckline is broken up at this stage, or you can wait a pullback. In this case, on the new support. So the neckline in the case of a double top is a resistance. And as you have seen before, a resistance, once it is broken, becomes a support. So once this resistance are broken up, it becomes a support. And then you can buy any pullback on this new support to take advantage of the new uptrend. So at this point, pullback, you can buy again this underlying to enter the bullish trend. Let's see now head and shoulders pattern. This is also another reversal pattern. We can see it sometimes. It is very difficult to find a really nice head and shoulders pattern, even if it is a well-known pattern in the world. So this is a definition. You have 3 consecutive tops or lows. Top, you can see the tops here, the head, and 2 shoulders. The 2 shoulders should have similar amplitude. That means the same size, around the same size, and they are quite similar in time and amplitude. And as this is the same for the neckline, the same as for double bottom and double tops, the neckline should not be an horizontal neckline. There is a weak slant on the neckline. You can notice in this case, you can see the uptrend, which is becoming a bearish trend. Either you can sell once the neckline is broken down, or you can wait for the pullback to enter the new bearish trend. This is exactly the opposite for what we call reverse and then shoulder. A reverse and then shoulder is useful when a bearish trend is reversing up into a bullish trend. So when we talk about head and shoulders pattern, it means a bullish trend which is reversing down. And when we speak about reversal head and shoulder pattern, it means a bearish trend reversing up. Here is an example I found on a very short-term basis on a 30-minute chart. This is not a perfect head and shoulder, but you can see a very nice head, 2 shoulders. The second one is last a little bit too long for a perfect head and shoulders pattern. But you can see that once you have broken down the support, the supports become a resistance, and you can sell again at the first pullback on this new resistance to enter a short position with an objective which is at the same size of the previous head. As you can see, this is the size of the head. You can retrace it on the downside to find your target.
Thank you for participating in this week's session. Please join us again next week. Get trading ideas, exchange rates, webinars, news, and commentary. Visit www.fxoptions.com. ISE FX options can be easily traded through all options-enabled brokerage accounts. These exchange-listed securities are cash-settled in U.S. dollars and have a European-style exercise.